As discussion over the future rate path for central banks dominates discussions here in Davos, I spoke to the CEO of DNB, Norway's largest bank, and began by asking her whether Norges Bank rate cuts are actually on the horizon.
I do think that there are many signs saying that we have now reached the top of the interest rate curve, and the market was a bit surprised by the latest hike. We now have 14 in total, and we have seen the inflation starting to come down. We have seen the markets starting to adapt. So I certainly believe there is a good case for stabilization. As for the timing of lowering interest rates, I think that is more uncertain. We'll have to read the signs in the economy for the coming 6 months. But I think we need to be prepared for both a decrease, but also maybe the fact that they will stay higher for longer.
Do you think that you are still living in an inflationary environment in Norway? Because if we look at the forecast for 2024, the central bank upped that inflation forecast to 4.8%, suggesting getting back to target is still a long way off. Does that compete with what you're seeing at the bank?
Inflation is still way off the target of 2%, but I think it's an important data point that we have seen inflation coming down, and there has been a substantial shift in behavior where we start to see people adapting more. Consumption is slowing down. We see that businesses are starting to feel the strain of a long period of hiking rates. But I think this is just what the central bank needs to see in the coming 6 months that will decide the future, that we're actually continuing to move at a comfortable pace towards the target of the 2%.
Where are the pain points with your customers at this stage after a hiking cycle and inflation? Where do you see some of the cracks in the system?
Well, overall, I would actually start by saying that the Norwegian economy is tremendously resilient, given the fact that we have with household more than 90% floating rate mortgages. The monetary policy is tremendously efficient, and we haven't started seeing defaults or losses yet in any financial institutions, nor in our portfolio. I think for the business environment, it's split in two. It's more challenging for the construction and entrepreneur parts, as well as the retailers who is tied to goods and consumption. Whereas anything that is related to energy, fishery, the maritime business, all of those are really doing well.